Welcome back, Mark, in the new year.
Thanks for having me. Happy New Year to you.
Yeah, Happy New Year. Now this is the fresh new beginning of 2018. But in order to look forward, we must see first where we are coming from.
Right.
So tell us, Mark, what is the most important part or the important moment that you observed in the 2017 market?
Well, it's interesting. 2017 was marked by a lot of events that caused real fear, confusion, uncertainty, unrest, being the riots and the marches, the uncertainty with regards to Fed policy. I think everybody was thinking the market would sell off because Trump was obviously president, and that obviously didn't happen. So I think a couple things are interesting. One is that the rhetoric itself doesn't usually cause market volatility as much as people think.
Yeah,
people look at Fed policy and they study every little word thinking that something could cause the market, whereas Trump speaks and you think the market should sell off and it doesn't. I think the perception of lower regulation is really the biggest development for 2017 that people really weren't aware of, that was a big positive for markets that really kept things afloat.
Yeah, you think this part is more about financial institutions and financial investors in this industry, or because some people would think that it could be the tax cuts for the nations to boost the market in other sides?
The focus certainly turned towards the tax cut right around September, October, and that was largely a big driving factor as to gains really over the last couple months of the year. So everybody was thinking it was going to be bullish for businesses, it's going to be bullish for institutions, for individuals. Those are all big positives, and people really forgot about a lot of the fears that they'd really been dwelling on for the majority of the year. So we've exited 2017 on a very high note, not only in equities, but in sentiment alone. People are very optimistic, potentially almost too optimistic, I think, given some of the ongoing concerns.
Yeah, then what we'll be watching for in the 2018 market, I think?
A couple things. I think that inflation could potentially rear its head again. We've already started to see signs of just the deliveries from the suppliers to the manufacturers has slowed a little bit. PPI, Producer Price Index, on a year-by-year basis was 3.1% for November. That's the highest in over 5 years. So there's signs of commodities starting to bottom out. We saw it initially in crude oil. Now the metals are starting to show good progress. The grains could be next. They're forecasting La Nina potentially in the Pacific that has already started to show some signs of grains bottoming out. So my thinking is commodities could have a big year and start to bottom out after almost 7 years to the downside.
Yeah, speaking of the commodity market, which is also the important part that our viewers should focus on, then for the commodity market and crude oil, and it is interesting that this is the first time since January 2014 that both crude oil benchmarks that top the market above $60 today.
Yeah.
So what do you think? Is it more about the growing unrest in Iran?
We've certainly had quite the rally of late. I'm not as positive about the year as a whole for crude. I still think there likely could be some unrest in crude has maybe moved a bit too far too quickly. The dollar still looks to be plummeting to new depths. That should help commodities in general. Crude, it's more about supply demand in the Middle East, whether they're cutting inventories, the demand, whether that can hold through. My thinking is the mid-60s likely is going to be at least a near-term peak for crude. The sentiment has simply gotten way ahead of itself, and we'll likely see a little bit of a pullback. And seasonally, this time of year anyway, beginning of the year, is not great for energy. So we could see a little bit of pullback, which probably would be a buying opportunity going into the summer.
Yeah, then what do you focus on the short-term price with the resistance level and the supporting level?
Well, recently we got above $59, I think, which is very interesting for crude. So getting back below the area that we broke out from is going to be important and really negative. I'd have to look depending on WTI or Brent, but getting below the levels that mark the lows for November, December, but at least the new monthly low would be important and would be negative for crude, suggesting you could see further corrective activity.
And also for the gold market, and gold is on its best run in the beginning of the 2018 right now. So what's your prediction on gold market?
Gold a lot more from a risk reward perspective this year than really in years past. I think we've started to show constructive signs of gold bottoming out. Some of this is related to the dollar also pulling back, which has helped all base metals. We've seen aluminum, copper make new records. Gold slowly but surely getting over 1,300 is certainly a bullish sign. Technically, we arguably are breaking the entire downtrend from 2011. So gold peaked out about 6.5 years ago. Now we're showing signs of gold bottoming out precisely where it did last December. Right in the middle of December, we saw a decent bottom, a move up in gold. Above 1375, that's a key level for investors. That would cause a move up to likely 1575 to 1580 this year, which would be a nice move for the metal. And I'm optimistic. I think the dollar continues to move lower based on a number of factors, but that should be bullish for commodities and bullish for gold.
And for the gold, and some analysis opinions goes like that because of the Bitcoin just pulled back, and this is part of the reason that gold run is best so far right now. So what do you think for Bitcoin? Because right at the beginning of 2017, the Bitcoin is like 970, and then rose at the end of the December around 20,000. So it gains like 2,000%. Yeah, right. So.
Yeah, there really is no correlation between gold or silver or Bitcoin. I think each of them moves on their own. I am still optimistic on Bitcoin just because the sheer momentum of the move up has been quite dramatic, and it's caused technically a lot of indicators to turn very positive. So near term, things have gotten a bit overdone, and we've seen some corrective activity lately in the last few weeks. My thinking is if we get under the more recent lows, which are near 12,500, I believe, then we could move down potentially down to 8,000 to 10,000, and that would be a great time to step in and buy Bitcoin. So I still think that we've barely seen any weakness in the bigger scheme of things. Keep in mind, we've seen several corrections in excess of 20% over the last few years. So to see Bitcoin down 20% doesn't mean it's in a new bear market.
So what do you think of the market sentiment right now?
I think sentiment has gotten ahead of itself and is too optimistic on Bitcoin in the short run. I think the longer term sentiment
but you still keep
likely
the bullish part.
Means there's still more distrust than there is true enthusiasm and faith in Bitcoin. There tends to be a lot of polarity. Either people hate Bitcoin and think it's going to zero and it's a fraud, or there are people that love Bitcoin and saying it's the new future, it's going to 1 million. I think there's going to be less of that. People are going to come together in 2018 and really merge those two ideas. People are going to come to accept it as being real and know it has legitimacy. And it's going to have normal volatility just like it's always had, which is above average for a stock market that has seen precious little volatility. So people are saying this can't be sustainable, it just keeps going up. Well, it can, and if anything, pullbacks would still be a buying opportunity in my view.
For all those years, you observe the markets every single day. Right. Do you have some tips like you can share with us when you observe the market?
Well, I would simply say that prices oftentimes can move higher or lower than many people expect, and that it's far more useful to use sentiment as a guide for where stocks or any commodities are going rather than the underlying fundamentals, just because once trends get in motion, they tend to persist. And so it's useful to use a combination of cycles, trends, and sentiment, along with seasonality, to really make a very well-educated guess versus just looking at a financial price and saying, well, it's above, it's over, it's too extended, and a lot of that really doesn't have any meaning, because things can go a lot further than people think.
No, we can use this tip in 2018 when we observe the market. Thank you so much, Dave,
My
for joining
pleasure.
us.
Thanks for having me. Happy New Year.
Happy New Year. Thank you.